This is CRE Deep Dive, hosted by Bamford. We go behind the scenes of high-level commercial real estate, breaking down deal structures and advanced capital strategies, including self-directed IRAs that move investors from Wall Street into real assets, real deals, real execution, real control over your wealth. Let's get into it.
Good morning. Welcome to the CRE Deep Dive. We're interviewing Mandy Drysdale with IRA Club. Welcome, Mandy. We finally are able to get together.
Yep.
Yes. So will you tell us about yourself and how you got into the industry?
Yeah, absolutely. So I started out as a financial advisor, and right out of college, I went to school over in the Tacoma, Washington area and jumped right into that job and loved it. Got married and had two kids, and then we decided to get divorced. And raising two kids on a financial advisor's schedule was not super conducive. So I went back and got my teaching degree. And my mom, the funny story is my mom's an English teacher, and I watched her read essays my whole childhood. And I'm like, I'm not doing that. So I started teaching math. I taught math from seventh to AP Calc, and I love it. I love working with kids. I think it's an incredible opportunity. Everybody should do it. But then when my own children, so my daughter now is graduated. She graduated a year ago and went to West Point. She's my youngest.
Oh,
So she is
wow.
at West Point, which I do have to brag about because that's pretty amazing.
Heck yeah.
And so when I knew she was on her way, I was like, what else can I do? I want to get back into finance. And so I joined the IRA Club, and it's such a great combination of teaching and working with people, explaining these concepts, as well as financial and that background that I have there. So super fun. Love my job. Number one thing I enjoy most is working with people and educating them about what they can and can't do and how to maximize some opportunities.
Yeah. So about 8 months ago, I just learned about self-directed IRAs, and I was
Mm.
blown away. I was like, "Why in the world? How come we all don't know about this? This is like a secret, you know what I mean?" And the ability to do alternative assets outside of your regular 401k, and be able to make a choice, and
Yeah,
not to be stuck within that box. You can do. It's very diverse. So
absolutely.
that's what I'm with you. I'm like, I need to spread the word. I'm going to tell
Yep.
everybody. I'm going to stand on top of the mountain. And I'm going to preach.
I love it. I love it. Yep. People are so
So,
funny because they're like, you taught in school. Why don't they teach this stuff in school? And I'm like, well, it's a really good question. So
yeah,
it is very much a self-taught education to figure out this self-directed side of things.
yeah. We can put our tinfoil hats on and we can go down that road, right? But we won't.
We won't.
Okay, so we're going to get into how what the process is, and so I think there's two different ways of doing this, or looking at it. Is one is you left a job and you have a 401k and you're still in service, and what are the things that you can and can't do while you're still in service? Obviously, it depends on what your company allows, but there are things that you still can do.
So, yeah, once you leave the job and it's considered an old 401k, that's your money. And even if you don't choose the best self-directed company, which of course is the IRA Club, I always recommend get out of that 401k. The fees in an old 401k are crazy. And so when you're working for a company and they're matching, that's free money. We say, yes, take advantage of that. Absolutely. But once you leave, taking that 401k and rolling it into an IRA, whether it's with the IRA Club or somewhere else, is going to drop your fees and save you quite a bit of money. So I always make that recommendation. It's your money to do what you want with. And so if we do a rollover into an IRA, you now are taking the tax advantages of that retirement account, but being able to do something else. And that's where we get into self-directed versus, a regular IRA. Self-directed just means that you can get into the alternatives and take control of those dollars. And that is a pretty straightforward process. We do an application online, takes about 10 or 15 minutes. We then encourage you to book right with our funding team. We're about the only company that has a dedicated funding specialist that will help you move the money from the IRA club, or excuse me, from your former 401k to the IRA club. And it's not hard. We're not talking rocket science or AP calculus. We're just saying that it takes a little bit of questioning and a little bit of forms, and we want to be there right there to help you with that. It does take a little bit of time to move from the old 401k over to the IRA club. And then once it's here, you can invest. With the current 401k, or you're still working, that is definitely up to the employer that you are hired by, because it's a contract that your employer writes, and it has certain provisions in it. Most of them, as in like 95% of people, are not allowed to move money out of a current 401k into an IRA. So I always tell people the first thing I do is recommend go talk to your HR department. You're going to say, hey, am I allowed to do a partial rollover? And you're going to talk to the peon at the bottom of the scale, and he's going to be like, what's a rollover? And then you're going to say, can I speak to your supervisor? I do, and I know I'm joking, but it is kind of a real thing. Like, you do need to speak to somebody in the HR department that actually knows what they're talking about. And so when you get to somebody who's a little more knowledgeable, and you can say, is there a provision in my plan that allows for a partial rollover? What age do I need to be to do a partial rollover? More and more what we're seeing is once you're over the age of 59 and a half, that money is a little more flexible. So that being said, the first step is to find out if you can do anything with the HR department. If they say yes or no, then it would be the same process, fill out the application, do a rollover. If they absolutely say no, the other side or a little note about a 401k is that you're able to take out a loan. And so you can borrow up to $50,000 of the 401k from yourself, and you're going to pay yourself back. And that does give you a little bit of flexibility. Here you go again, math teacher, you want to run the numbers. Does it make sense to take money from the 401k and invest in this, a different kind of deal? And you're just running to figure out, is this deal going to be worth it? Because now it's a little bit different structured. But we have people that'll do that too.
Yeah. So now when you take the loan from your IRA, isn't there a isn't it $7,500? Isn't it like capped at $7,500 for a cash distribution or to start? I mean, if you're going to open up an IRA, you can do more than $7,500, or is it just up to that $7,500?
So when we talk about a contribution means money you're adding into an IRA or
Okay.
into a 401k. And that's where your caps are. And I'm really glad you brought this up because there's a lot of confusion with it. And it's because it's a whole nother language. Like, what's a distribution? What's a contribution? What's this? What's that? Contribution means we're taking cash from our pocket and we're putting it into a retirement account. And if we want to put money into an IRA, an individual retirement account, your cap is $7,500. Once you're over the age of 50, that does jump to $8,600. If we're talking about a loan out of a 401k, you are able to take up to 50% of the account balance maxed at $50,000. That is a loan that you take from your IRA. You pay yourself back. You pay yourself back the interest. The IRS doesn't care what you use that loan for. So you can take that and invest in a deal. So we're talking about a loan versus the contribution. And then if we talk about rollovers or transfers from one retirement account to another retirement account, that is a transfer or a rollover, unlimited. I can roll over $1 million. I can roll over $10, right? So it's just that terminology, which is why it's so nice to have somebody on an onboarding team like we do, where we're walking you through it. We're making sure you're using the correct terminology and moving money appropriately so you don't get fees, you don't get taxes, you don't get penalties.
Yeah. And there's even people in the industry of self-directed IRAs that get that wrong.
And that is a very true statement. Speaking
Yeah.
from experience, it's, your financial advisors are very knowledgeable about their product and the company they work for. But in terms of understanding kind of this alternative space, we get a lot of confusion there as well.
Okay. So after opening your account and the initial rollover, are there any annual maintenance fees that go along with this?
Absolutely. So, and man, you could get me on a soapbox when it comes to fees because it's terrifying. But to directly answer your question, we're a flat fee company, and that is one of the three big things that makes us stand out from the other companies, is
Mhm.
that we're not a percent-based model. And I know I'm going to get some pushback, and I encourage anybody to challenge and talk this talk because I think it's such a fascinating conversation. But if you have an IRA, a 401k, any retirement account with any company, you're paying fees. And I hear this all the time. I don't pay fees. I ask my financial advisors, I don't pay fees. And I'm like, you are. And the industry has done some pretty sneaky things. I think it's dishonest. One of the reasons that I left being a financial advisor, besides those two kids, but they changed the name of them. So if you say, what's my fee? The financial advisor can actually say, you're not paying a fee because they changed the name of it.
Right.
Two, you have to ask, what's the 12B-1? What's the front end? What's the redemption? And it's like, how do you keep track of that kind of information?
Right.
So if you're in an IRA and you have no financial advisor, about the cheapest fee that you can get to is about 0.7%. 0.7%. So you're like, oh, that's nothing. But let's start talking actual numbers and how much money that fee can be. And it
Right.
adds up quick. So to go back to your question, what do we charge? We're a flat fee model, so we do not have a percentage. And what we do is a flat $195 per year per account. So if you open an IRA, it's $195 on the day that you open it and every year thereafter. And that's for us to be your administrator. The second fee that we charge is an asset fee. So when you do a deal, something like what you've got on your end, it's considered an asset because you own the IRA and the IRA actually purchases those alternative assets. And so the asset inside the IRA now is a joint venture with you or some kind of wholesaling deal, right? And so that is $195 per year per deal. So for about $390, you can have an account with us and an asset. And that is, to be very honest, and this is why I left being a financial advisor. I didn't like the sales pressure. That's not how I make my income. That is about the cheapest you can get. Not the very cheapest. There are a few companies that are less, but
Right.
that's about the cheapest in the industry is for $390. You can have an account with an alternative asset in it.
Yeah. That's amazing. It's pretty good. It's pretty good.
Yeah. Yeah.
Um, let's see. There's so many. I'm gonna keep moving on. There's so many questions I want to.
To
We're gonna
dive
have to
into.
we'll have to schedule another one.
Absolutely. Absolutely.
All right. So let's see. Um, can we go over your fee structure? So since we're talking about that, I can bring up. Let me move you around. Let me move the screens around here, and I can bring up your website, and we can look at the fee structure and show people.
Yeah. What's nice about ours is that it is 6 lines long. In our owner, founder Dennis Blitz, who is actually called Master Yoda, just because he's been in the industry for so long and he's very well known, does not believe in that percent-based model, or he's really transparent. We want you to know exactly what you're paying when you work with us and not have these, well, I didn't know that was there, right? I mentioned the cheapest is 0.7. The average cost of a retirement account with Fidelity, Vanguard, Schwab, or anybody else is 4 to 5%.
Yeah,
4 to 5%. And
but
it's not easy to calculate because there's a little fee here, a little fee here, a little fee
yeah,
here. Where if you look at ours, it's 6 lines, right? We
yeah,
have the at the very top in the black, you can see that our membership is $195 per year. That's what I was just kind of mentioning.
Yep.
And then every time you make a purchase or your IRA does an investment, right? And we can kind of distinguish that. Like if I want to buy a house on 123 Green Street, that's considered an asset. If I want to do one of your deals, Dennis, and do a wholesaling or a joint venture, that would be considered an asset. If I did gold and silver, that would be considered an asset. So every time I pick an asset, it's $195 per year per asset. If you kind of jump down, the earnest money deposit and the buy sell fee, and then that part is a little confusing because the earnest money is what, let me back up. So if you look at the buy sell transfer real estate line for $175, the one right below it, that is charged if you are purchasing an actual property. And really what that's doing is combining the earnest money, $75, plus the buy sell transfer fee of $100. And it's the only time we charge the one-time fee is if you actually buy a house. And that's just because it's so time consuming for our team, it just pays for their services. So that's kind of the exception. If I buy a house or an apartment building like completely all by myself, that's where you have the one-time purchase fee of $175. Any other deal, it's just $100 one-time purchase fee, which is the line above that. So if I decide to do a joint venture with you, it's going to be the one-time purchase fee of $100. If I decide to buy a syndication or gold and silver or something like that, crypto, private equity, do a private lend, that's the $100 purchase fee. What that's paying for is for our company to look and make sure there's no prohibited transactions occurring. Our job is to make sure your IRA is protected and that you're following IRS regulations. I'm no longer licensed as a financial advisor. I can't say, hey, deal A is going to make you so much money and deal B is crappy. I cannot give you that kind of advice. But what our team does and what that buy sell transfer fee pays for is for us to look into the deal and make sure that we're looking for any prohibited transactions that might harm your IRA. So it's a one-time purchase fee. And that's what that does. We also include transfer asset there. What that means is if you have another self-directed IRA, say with a different company, and you decide to transfer that asset, so you have a self-directed IRA somewhere else, maybe with a joint venture in there or a deal, and you want to transfer that over to the IRA club. So that's where that transfer fee, it's a one-time transfer fee. And it's just because we're doing the titling, we're actually looking at the due diligence, looking for the compliance piece in there to move the asset from one company to another. So that's why you have the buy, sell, transfer in there. The fees on the right, the banking fees, are just if the bank is going to charge us something, we do pass that through. So if you are like over the age of 59, you're over 59 and a half, you're ready to start taking distributions from your IRA and you're like, oh, will you please set up $1,000 a month to come from my traditional IRA to my pocket so that I can live, then that's where that $5 reoccurring distribution fee comes in. If we transfer money via check, that's where the $15. So if you said, oh yeah, please take a withdrawal from my account and send it via check, it's $15. And then the wire, which is the most common one, is the one that is how we move money. So if you said, I'm going to move from Fidelity to the IRA club, there may be a wire fee of $25 to move that money from Fidelity to the IRA club. If we go from the IRA club into a deal, that's going to be a wire out. So that might be $35. So those are just subjective to how the money in your individual situation is being moved. So yeah.
Awesome.
The other one, those other ones, the miscellaneous ones are pretty rare. The one I like to highlight is the Roth conversion. So that's under the miscellaneous, the bottom row right there on the left. Yep. So if you decided to take some money from your traditional 401k or a traditional IRA and convert it into the Roth, which just so we remember, Roth is liquid gold, tax-free forever. So we like Roth. We want to look for strategic ways to convert to Roth. But when that conversion happens for our team to do that process, we do charge $100.
And is that the same as when you're doing your initial rollover? Is that
Nope.
okay?
Nope.
No.
No.
No,
So most of our, go ahead.
no, finish what you're going to say.
Most clients, and this is what I see probably 99% of the time, is that we open the account. And so when we go through the application, you're going to pay $195. The money, the application gets completed, it goes to our team. We open the account, we initiate the rollover or the transfer. And that's where you might see the first wire fee. And then you give us a call and you're like, this is the deal I want to do. I'm super excited. And we start exchanging paperwork to make sure it's compliant and all the things that we talked about. That is when you're going to see the one-time purchase fee. And then when the money goes from the IRA club to your investment deal, that's when you'll see the asset fee of $195 and potentially another wire fee. So people are looking $540 on average, pretty average to do one asset in year one. And then in year two, when those one-time fees are gone, it drops down to that $390.
Okay. Well, I guess what I was meaning, like if you are in a traditional and you're
Mm.
doing your rollover and you want to convert into a Roth, would it be the 195 plus the 100 for that conversion?
That's a great question. We actually have to open two accounts.
Ah,
You can't, it's not like I can go from a traditional at Fidelity, do the conversion into the Roth at IRA Club.
okay.
Money has to transfer into the exact same account. So what we do is actually open a traditional.
Uh,
We move the money from Vanguard to IRA Club into the traditional. Then we open a Roth and we do the conversion. And now you're like, now I just paid for two accounts. That doesn't seem fair. And I completely agree. So when you and I are working on we're deciding what you want to do, if you convert that whole account, we're going to just not charge you for the traditional. We're going to open that as a placeholder because we know you're immediately going to do a Roth conversion. So we discount that one. We know it's happening, or like a backdoor Roth. We do this for our backdoor Roth clients. We open that as a placeholder. We move the money where it needs to go. Then we do the conversion and then we close that one down because it's not really needed. We just need it as a placeholder and we wouldn't charge you for that, of course. And then if you are doing like a backdoor or you decide to move some more money, we open that one back up to receive those funds and then convert it and close it back down. So now, if you have two accounts and we're actively investing out of a traditional and a Roth, then we would maintain two accounts. But if we're just using it for transferring or conversion purposes, we of course would not charge you.
Okay. I would encourage everyone, so with the age of AI, is put your documents from your current employer into there and ask the questions. What kind of rollovers can I do? Can I do any kind of distributions? And it should read those documents. And the same with the uh your fee schedule that you're having with whatever you know, custodian you have, is put those in there and see what kind of fees you're being charged. The because this fee structure here is pretty advantageous, right? So
Yes, yeah. I mean, typical, and again, it sounds salesy, but
no, yeah,
running the numbers, if you run the
yeah,
numbers, we
yeah.
save people quite a bit of money by doing this flat fee structure, than doing any kind of percent model. With the AI too, and I love that idea because then you don't have to wait for the peon at the bottom at the HR department to field
Right,
questions.
right.
And that's a great way to find out what your policy can do. I hadn't even thought of that, so I'm going to use that for sure.
Yeah, well, and it's also it is like when you do go to them and you start saying, "Hey, I'd like to do X, Y, and Z," and they say you can't. Well, you can give them, letter, by the letter. This is what your contract says. You don't know
Yeah.
your own contract. I do.
Exactly.
Yeah.
Exactly. I love that. I love that. Yeah. And I will say though, even if one, be careful what you put, the more I go to these conferences all over the US, and I'm by no means an expert and I know very little, but I've heard multiple people say, be careful about the information you put through AI, personal
For
information.
sure. For sure.
Um, but also when you are talking about fees, you're not going to believe this. You are not going to even believe this. So I was in New York at a conference and I happened to meet a computer programmer. And he was telling me how he helped build the program that takes the fees out of the account before they even present the numbers. Because fees are calculated and money moves in the stock market so quickly and so moment by moment,
Yeah.
that let's say you earn 6%, they'll only show you that you earned 4%, and they'll take the 2% as a fee, and you don't even see it.
Oh,
I was horrified. I don't think I am fine. You know what? If I want to pay for a financial advisor and I want to be in a mutual fund and I want to be with these companies, there's nothing wrong with that.
right.
But I don't like the fact that it's behind my back. Just tell
Yeah,
me what I'm paying
right.
so that I can pay for it and
Yeah,
decide. I
yeah.
hate the fact that it's behind. But you
Mm.
talk about lobbyists and you talk about what gets presented and how it is, you know, like tinfoil hat. Here we come
Yeah,
again.
yeah. No, I'm with you. I'm with you. That trading stuff is just crazy.
Oof.
When you start diving into the history of a bunch of that stuff, it'll make your hair. What? I mean, if you had hair,
I love it. Yeah.
yeah. So,
Yeah.
you say, well, we're here. I want to highlight something here. You guys have since we're talking about trading, a trading platform. And I'm like,
Yes.
I was totally blown away. I was like, this is super cool. Could you please talk could you talk to us a little bit about that?
Absolutely, absolutely. And before I jump right into that, I just want to, I'm not trying to scare anybody. I'm invested in the stock market. It's a great place to put money. So I'm not, by no means am I trying to do that fear thing that some of the sales companies do. I just think it's important to be aware so that you're making educated decisions. But so here's a little bit of the history of why we did this. The majority of our clients do real estate in some fashion. And real estate tends to come with either a rent, right? Like we buy an actual house and each month I'm getting rent, or some kind of joint venture or syndication or wholesaling deal, and you're going to get some kind of distribution. And what we noticed was that clients were having cash build up in their IRA. And if you look at other self-directed companies, that's what happens. So, super easy example, just because it's very concrete, is let's say I buy a house. And well, actually, let me just give you my exact example. So I have a house, my Roth IRA purchased a house, and each month I get rent. If I put that rent back and leave it at the IRA club, we're a bank, so it is FDIC insured, it is protected, but it is not invested. So every month when that rent sits there, I don't have to worry about it being losing value, but it's not gaining value. And we know with inflation and the way things go that cash sitting idle is not good. We want to be able to invest that. So we started looking for a trading platform that would work with us so that we could have people bring any leftovers, right? When I bought the house, I had $700 left over. What do I do with the 700 bucks? What do I do with the rent? What do I do with the distribution or a payout from an investment? And now, because we've integrated and we're two partner companies, so we work with this company, which is called iFlip, like you flip a pancake. The idea was that they wanted to flip the idea of how investing gets turned upside down. So that's kind of where their name came from. So that people could take cash and seamlessly move it over into the stock market. And if nothing else, I can put it in a money market. Now, of course, iFlip does a little bit more. Their niche is this AI smartfolio, which is kind of being highlighted right there. And what the idea was is that everyone should have access to financial advising information, not just the wealthy. If you don't have over $1 million at Fidelity, Vanguard, or Schwab, you're not getting attention. They're putting you in a mutual fund and they're checking on you once a year, maybe twice a year. If you have over $1 million, they're like, now you're kind of interesting. Let me put a little more attention to you. And we're like, iFlip, the founder, Randy, Tate was like, that's not fair. Let's give everybody access to some attention. And so what they did is created these smart folios. And that's where an AI is actually buy, selling, and holding on your behalf every day. So where you can see invested in the exact same funds, the AI versus S&P 500, where you're able to buy and sell and move money in and out of the market, you're able to do better than if you're in the exact same stocks, but you just buy and hold. Right? So if I buy and hold, I'm going to trend with the market. So I'm in the ups and I'm in the downs. And over time, I'm going to be higher, right? We've seen that for years. But what the AI does is when the market starts to drop, it'll sell and actually pull your money out of the market, hold it in cash until it starts to recover. And so just by avoiding some of those dips, you're going to make some more money. Now, obviously, if you're looking at that chart, you do see the dips. So it's not perfect, but it is tracking that and being able to sell when you need to sell. So that's kind of its niche. We are partner companies. So it's IRA Club is completely separate from iFlip, but we've integrated the software. So when I get rent each month, I just jump online or I give Karen a call and I'm like, hey, Karen, can you move that money from IRA Club over to iFlip? It's a 3-day transfer, and you're able to just seamlessly transfer. No wire fees, no ACH fees. We don't charge you for that. No asset fee. So if when the money that I'm sitting over at iFlip, I'm not paying the 195 asset fee, that is free. Now, don't get me wrong, iFlip has their own fee schedule.
Yeah.
iFlip also believes in flat fees, so they are a $7 a month right there.
Oh,
That
wow.
subscription is $7 a month to use their platform. Then they have a tiered model with their brokerage account optionality, and
Okay.
it starts at $10 a month, and it kind of jumps depending on how much money is in there. What we've seen is percentage-wise, it's still going to be less than being over at Fidelity in a mutual fund. So we're still saving you some money. But so no fees on the IRA Club side to use our trading platform, but on iFlip flat side, they are charging you $7 a month and some fees. And I'm happy to jump into that. So again, we really do believe in that transparency.
Yeah, no, yeah, yeah, that's awesome. I'm was totally blown away that I saw us clicking around on here today, getting ready, to have the conversation with you. And I'm like, what? What is this? And I was like, oh, I know
Yep.
we're talking real estate, but I got to bring this up. This
Yep.
is too good.
Yep.
Yeah.
Yep. Yep.
Because
Yeah.
I mean, that's why we're again, like I had said to you earlier, I was like, that's why we're here to do diversification of our portfolios, of being able to protect our retirement fund, grow our retirement fund, and as
100%.
many alternative ways as we can. And
100%.
yeah, awesome, awesome.
Yep. Yep.
Um,
Exactly.
let's see. So went through pricing. We have different accounts that we can use. That is something I'd want to talk about is the different accounts.
Mhm.
But the investor row, I like this too. Where we can opportunities. You can find
Mhm.
different opportunities that you guys already have. I didn't click through this. I don't know how this works, but I do like to see where the custodians are saying, "Hey, look, these are opportunities that people are brought, just like me.
Mhm.
We may bring you an opportunity like we're investing in a Las Colinas property, or raising capital for a property in wherever, and
Yeah.
and you guys, obviously." You're not going to say yay or nay, this is a good deal or not. You got to make your own decisions, but
Mhm.
you at least you have a working relationship with I'm not even going to say working relationship because I don't want to you just have a relationship with people that may have opportunities that you think might be okay for people that have RA club.
As an administrator.
Right, right.
Yeah. So investors row is kind of interesting because and I it's interesting because it is such a precise line that you and I have to walk. We cannot give a financial advice. I am
Right.
no longer licensed. I'm no longer a fiduciary. That doesn't mean I don't care deeply and want people to be invested. It just means
Right.
that legally I have to walk that really fine line. So what we do with Investors Row and with people like you, Dennis, that are trying to build capital is that we want education. We want
Yep.
people to be able to say, what is out there? What deal could I do? And so, and then if you type into Google wholesale deals or joint venture deals, you're going to get a billion. Where do you even start? So our idea with this Investors Row and working with capital raisers is that now we can give a client one spot to do some research. And so what we do is we put the way for a client to reach out to the individual sponsor or deal. We put a little bit of background. So we're not by any means advertising or I didn't mean the word advertising. I meant by no means are we encouraging people to invest there. We're just giving you a place to start your research, to start your due diligence. And that's because Dennis Blitz believes in education. Like he's just like, as we started the whole call, right? We said, how do you know about this stuff? It's
Right.
self-taught and it's
Yeah.
frustrating. So we want to give people a platform for that.
Yeah. Yeah.
So,
That education part is, it's super important. And
mhm.
what to look for.
Yes.
Whether let's say that I do have a deal, whether you go with that deal that I have or not, the main thing is like what to look for, what to, make to protect yourself, you know,
Yes.
um, because when you're getting into syndications, and I'm not a huge fan of syndications because there are so many ways, just like you were talking about the fees, there's so many ways that these, sponsors and GPs are manipulating stuff, and I, I don't like it. So,
Yeah. Yeah.
but anyway, it's education, making sure you know what you're getting into before sign the PPM that some sponsor is putting in front of you. So
Yeah. 100. That's so important. It's so well said. Absolutely.
yeah, yeah.
Yeah.
Even though I'm stumbling over myself, not trying not to say something that's going to get myself in trouble or you.
Yeah. Yep. 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 Um,
Okay, let's see. We're gonna go back and
you want to talk about a little the different types of accounts that people can open?
absolutely, absolutely.
Awesome, perfect. So we pretty much do anything that is retirement related. So if you own your own business with no full-time W-2 employees, we have options for you, like a solo 401k or a SEP, which is a simplified employee pension plan. So you could do something like that. Um, Fascinating. Hopefully, this is a nugget of information for you. You can open a Roth SEP IRA now starting in 2026. There is a Roth solo 401k. So remember, Roth is tax-free growth, liquid gold. And so one of the strategy conversations that we can have is like, what makes more sense, a SEP or a solo, and why should we choose one or the other? I can't make that decision, but I can present you with the information so you can make the decision. And this is brand new with our website, is that if you have a small business and you do have full-time W-2 employees, we are the only self-directed company to offer small business plans. So you can do a safe harbor or a payroll deduction plan for your company, and it will give you the ability to self-direct, right? So now our business owners can do some self-directing and offer that to their clients. So whether you have employees or you don't have employees, we have you covered. Yeah, the small business plan is kind of new. And like I said, there's no other self-directed company doing this right now, so it's kind of interesting, kind of interesting. Then if you are an individual, you have your individual IRA, you have your Roth IRA, and that again is just a good strategy conversation. What's going to make the most sense for you and how to maximize those tax-free growths and when to convert from your traditional over to your Roth IRA. We have HSAs. Most people didn't know that you can use an HSA and self-direct it. So if you have an HSA, and even a current one, that's what's unique about the HSA,
Yeah,
is that you don't have to have left the employer to move it. You can move a
yeah,
current HSA and self-direct it.
yeah. I was
Um,
shocked. I was shocked. Can we get just I mean, how,
yeah.
what, why, how come that HSA, is able to move that money around so freely?
I think I don't know the technical answer. If I was
Okay.
to take an educated guess, it would be because of the um I mean, I always think money is the bottom line. So how much is the HSA really paying the company? What are the
Yeah.
tax deductions for the company? But it also might just be that how the HSA is structured. But I don't have a good answer for you.
Right. Yeah. 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 Because when I learned again, I probably learned that 2 or 3 weeks ago. And I was like, what? You can
Yeah.
use your HSA to
Yep.
fund what?
Yep. Yep. And
So,
that's so powerful because a lot of times when we're younger, when we're in our 40s, 50s, and even 60s, we don't need the HSA for
right.
the medical expenses, right?
Right.
Or we're able to pay for it out of pocket and we can kind of stockpile that because an HSA is triple tax benefited. Tax-free going in, you get it tax deduction, tax-free growth. And when you pull the money out for qualified expenses, which is your health, so healthcare, long term, whatever, when we get older and we actually need it, it comes out tax free. So triple tax benefit in an HSA. So if we kind of think, I could use my HSA to pay for ibuprofen in my 40s or 50s, or I could invest it and grow it and save it for my 70s and 80s when, I might need some long-term care or some dollars. So depending, and again, that's the conversation that I like to have with clients as well. Is what are you using your HSA for? Are you spending it every year? And
Right.
honestly, if you're spending that money every year, which is great, everybody has their own needs. I
Right.
don't recommend moving to the IRA club
Right.
because it's not advantageous. Stay with your employer, stay where you're at, use that debit card as you need. But if you're like, wow, I'm able to pay for some of these fees or these medical costs
Yeah.
outside of my HSA, then let's talk about moving it, growing it, investing it for later.
Awesome. Yeah. Um, so we were talking about that and also your talk a little bit about your it's not the Coverdale education. You guys
Ah,
have
the Roth IRA. Yes.
yeah.
So this part's so fascinating. The wealthy do not um, give money to their kids. Okay. So what they do is they pay their children and then the children pay for their own expenses. So here's the thought process. The only thing you need to open a Roth IRA is earned income and a social security number. That's it. You need to have some kind of job where you're making money and you need a social security number. I like to follow that with our youngest member to date at IRA Club is 14 days old.
Mhm.
So then you're like, what job does a 14-day-old baby have? And that baby is a model for his parents' company. And they put his little cute face, doesn't even have to be public. I know we're all worried about that kind of stuff, but just somewhere in the business. And then they paid him exactly $7,500 per year for that job. Why that amount? Because that's what is the contribution limit into the Roth IRA. And so they pay their kids, money goes into the kid's checking account. If the kid ever gets audited, the parents are like, well, I'm paying him to model for me. And then the money goes from the kid's checking account into the Roth IRA. The the youth Roth IRA is so powerful because those kids have what we don't, and that's time, right? They are 14 days old, so they have how many years to grow that tax-free account? If that parent puts the $7,000, which they did, and invests it at a reasonable rate, doesn't even have to be big, by the time the kid's 60, it's $1 million.
Oh, easy. Yeah. Yeah.
Easy.
Yep.
And if they make they pay their children every year, it's
Right.
multi-millions.
Oh my gosh.
You know what I
Yeah.
mean? So
Yep.
then the question I get is, well, what about the new Trump plan, the kids Trump plan? What about the 529 plans and stuff like that? And I'm absolutely an advocate of, figuring out what's best for you, but the Roth IRA allows for higher education expenses. So if I open a Roth versus a 529 plan, and this is the exact thing that happened with, so my daughter Lily got into West Point. I had a 529 plan for her. She doesn't need it. I can't use it. So now I'm looking at what do I do with this money that I put away for college that she doesn't need. And we can get to that. But the Roth can be used for higher education. So if I'd taken that money and put it in the Roth from the beginning, then when she got to this situation and somebody who chooses not to go to college or gets a full ride, then that money can now go to their retirement. But if she had needed it, she can take money out of the Roth without taxes and without penalties to pay for school. So see how it gives you more options in the Roth than it does in the 529. That being said, in 2026, they are allowing some rollovers from your 529 plan into the Roth. So I was kind
Oh,
of
wow.
saved. Yeah, we
Oh,
moved that
wow.
money over for her.
Okay.
Lots of little nuances there. I won't jump into
Yeah.
that, but talk to me
Yeah.
about it if you're in the situation. But so I like that Roth as like you can't do better than that. And then, I'm not saying that the Trump plan for kids isn't great. That's $1,000 free for kids. Absolutely take advantage of that. There's, then do the 529 plan, but that Roth is going to get you the best that you can get.
Amazing. Yeah. No, that right there, that little nugget is like, wow. Um, and again, the education. Why don't we know about this? This upsets me. We're gonna move on because I'm gonna go off.
I know,
Can
because
we,
that's where you need to get a drink at a bar and just
yeah.
dive,
Uh-huh.
dive for hours.
All right, and my tinfoil hat. No.
Yes, yes, absolutely. Tinfoil hat.
Right. Okay, so I'm glad we covered that. Let's hit this checkbook IRA for those that have rentals and are buying properties, and what are the ins and outs of this here?
Absolutely. I like to start off by saying that we offer this. There is a place for the checkbook IRA. It's also called an IRA LLC. Those are the same things. It gets very confusing because people are like, well, I open an LLC to run my business. Is that the same thing as the checkbook IRA LLC? And it is not.
Right.
So just to give you an idea of what that means is we're an administrator. So if we open a custodial account, which is everything I've been talking about now up until this point. So with custodial Roth, solo 401k, anything that we've talked about is custodial. What that means is when you are ready to make that investment, you give us a call and our investment team is going to do the titling, look for any prohibited transactions, all of those pieces. We're your bookkeeper. We help prepare tax forms at the end of the year. If you do a checkbook IRA or an IRA LLC, those responsibilities now slide to the client's shoulders.
Mhm.
And so when you're ready to make an investment, you're not reaching out to us. You're doing all of those things on your own. And then you're actually they call it checkbook, right? Because you can write the check to invest in the deal. There's nothing wrong with that. But that just means the client needs to take on the responsibility of the due diligence and those pieces.
Mhm.
And that being said, you can kind of say, well, gosh, what would really be the benefit of the checkbook versus the custodial account, right? So the first thing is who has to do all the due diligence and who has to do the compliance and the titling. So, right, then now you're choosing that piece. The second thing to know, and this might be another nugget, is that there is a audits division at the IRS for the LLC, checkbook controlled account, because they recognize that that's not your job. Your job is real estate. Your job is doing these other investments, and you might even have another W-2 on top of that. You have other things to worry about. So they recognize that people make mistakes. And in fact, 80 to 90% of people make a mistake in the first 5 years in a checkbook controlled account. And if you do, and you're not able to fix that, it will ruin the IRA. There'll be penalties and taxes and all kinds of things. And so, and again, I'm not a scare tactic person. What it is just to know what are you getting into. So you get to do the titling, you get to do the compliance pieces, you do all of those things. There is an audits division that's kind of looking out for that. And then the third piece is that when you establish that, you are actually establishing an LLC. similar to the one when you're starting your own business, but you have to pay state filing fees for that LLC. So a lot of times it's more expensive than it is just to have us do the same job. We have more clients backing out of their checkbook IRA than opening the checkbook IRA because they're like, wow, this is more responsibility and work than I wanted to handle. And so we have them converting into the custodial versus that checkbook IRA.
Can,
All that
can
being
we,
said, go ahead.
no, finish.
There is a need for the checkbook IRA. And so people are like, well, when do I need that? If you are going to auctions and you're buying property or real estate at an auction, you need that money within like 2 hours.
Right.
You're going to need a checkbook IRA. If you're doing a lot of private lending and you're doing 6-month loans, 8-month loans, even 18 months loan, our fee schedule doesn't necessarily make sense. So the checkbook might be more convenient to you. Somebody who has a rental property, we don't do those checkbook IRAs. We do that for you. We process the money. It's not a long time. People are like, it'll take forever for me to get my money. No, it doesn't. It's 3 to 5 business days.
Okay.
When you call Carlos and his team and say, hey, Carlos, I want to buy this house, it's 3 to 5 days for us to do that for you and to wire out the money to purchase the house and then do the transactions. We don't charge for that. So every time your rent comes in and things, expenses come out of that account, we don't charge you for that. So I always say, if you need it, it's there for you to use. If you
Yeah.
don't need it, I often even recommend start with the custodial. Go through the process with us. And
Right.
then if you need that extra layer because the speed or the type of investing you're doing, then we'll convert it for you.
Yeah, because that's what. So I'm glad you covered the timeline. Let's say,
Mhm.
the toilet needs to fix, or we got a bigger expense. The roof needs to be redone. How long is it going to be for that transaction? And those smaller transactions, obviously, okay, let's also cover this. Obviously, if you're going to be purchasing a rental property, you're probably going to have property management.
That's what I was just going to say.
Okay, right. So, and they're going to be holding, money back from the rent to cover those smaller, maintenance
Exactly.
things. The bigger things, the 3 to 5 days for those, I think it's going to be fun, right?
Yep.
Yeah.
Yep. Yeah, and that's that arm's length distance, right? So to be compliant with your IRA, you're not able to be paid for the property management position. And you are not allowed, the IRS says you can't have sweat equity.
Right.
So the joke is you can't even change a light bulb. And that's true. They don't want you going into the house and changing, doing physical activities. And it's the IRS's way of saying this is a retirement account. It's supposed to be passive. We're going to keep it at arm's length. And so I would say 99% of our clients that have a rental or rentals have a property management. So when those expenses come up, like mine did, and I had a water heater and we had flooding and it needed to happen right there, my property management company jumped in. They took care of everything and then they submitted the expense to the IRA club and the IRA club paid them and it all was good, right? So that's why in end, if there's an emergency and you need to use a credit card to pay for the water heater, your IRA can reimburse you. It's not recommended, and we don't say do that on a regular basis, but it's possible so that you can take care of those needs when they occur.
Yeah. So we touched on syndications for just a bit ago, but the in those syndications, those loans that are going to be for the purchasing of those properties have to be non-recourse, correct?
Yes, they do. Yes, they do. So here's my little teacher explanation of this non-recourse stuff is that the IRA is a trust. It has asset protection in and of itself. And when I say IRA, I mean HSA, IRAs, solo 401k, SEP IRAs. All of these retirement products are trusts. So that is a asset protection. Things can't get in and things can't get out. So, for example, if you were ever to declare bankruptcy, the government doesn't go into your retirement accounts. If you bought a property and somebody in with your retirement account, and somebody inside that property tried to sue you, they actually can't get out into any of your personal assets. So what does that have to do with loans? What it has to do with is because there is no recourse for the bank, because of the asset protection, if you buy a house with a loan and you default on that loan, the bank can't get out to any of your personal assets. So they're like, I will do a non-recourse loan for you, but you need to pay a higher interest rate and typically a larger down payment. And that's what a non-recourse loan is. Syndications, we don't often see that because they've set it up in a way that they've borrowed money, they've figured out their own lending, they've created the syndication, and then the IRA is able to invest in it.
Mm.
If you are investing in a syndication, then you aren't worried about the kind of lending. They've already figured that out by the time you get to the investment piece. But if you are trying to buy a property, and this is the other thing is like, well, what if I don't have enough money to buy the whole property or get into a deal, a joint venture or any type of deal? You can set up a partnership. And that partnership can be your IRA and your Roth IRA. You could partner and go into a deal. You could be your cash and your IRA. It could
Okay.
be your kids' IRA and your IRA. And
Right.
that partnership kind of idea, it can be the non-recourse loan and the IRA together to purchase the deal. So that kind of all goes together. But I love that because like I wasn't able to purchase my whole house outright in my example, what I've done personally. So my
Yeah.
brother and I partnered together. He
Nice.
used cash. I used the Roth IRA. I'm
Yeah.
winning all day, hands down, because mine is tax free and he's paying capital gains. But
Yeah.
we were able to get into this investment deal because we partnered together. It's percent in, percent out, which means he owns his half, I own my half, which means I own half the rent and I own half the expenses.
Yeah. There are so many more questions
I
that
know, I just
I, yeah. Let's see. So tell us how obviously we can get a hold of you through IRA Club. And what do we need to do? Where do we need to go?
Yeah, so if you iraclub.com is our website, and if you click on the blue button, schedule a call, right at the top, you're going to get my face is typically kind of on the top with my team. And so if you scroll down just a little bit, there's me, and then Cody and Sabrina are both, not sorry, it's not Sabrina, Rebecca are our onboarding team. These are the ones who are going to help you. What kind of account? What's the process? What do you specifically need? And you can jump on my Calendly. Most of those you can schedule same day, if not that same week. So finding a time that works best for you. Then see the phone number at the top, that 312-795 number at the top. So we are not a call center. This is something that really separates us from a lot of the other custodians or administrators is that when you call, you get a call center, put you on hold, all the things. Nope. A live person is going to answer the phone that you can understand. It's a person you can understand. Yay! I can't tell you how many phones my husband's broken through. He's like, anyway, so you can call us. We all have extensions, and so you're able to say, "Oh, I have a funding question. Let me call," and they'll transfer you to Sabrina or a small business,
Yeah.
or you're right.
Yeah. Yeah.
And then if you scroll down a little bit more, when you become a client at the IRA Club, you get a dedicated client care specialist. It's either Stephanie, actually, Devin moved to investors. We have a new one, Luke. So it's Stephanie, Luke, or Julia, and they will help you. So I can't get logged in, or I have a quick question. These guys will jump on a call with you quickly. Then we have a team of investors. So Carlos is the manager, and then Adriana, and we actually have two more, Christian and Devin moved to expenses. So we've got a team there. And not expenses. Devin moved to investors. And then expenses, yeah, we just have a team. We're personable. You can understand us. You can jump on any one of our calendars that day. And then again, the phone number if you want to give us a call and we can get you transferred to the correct person.
Awesome.
Yeah.
Yeah. Mandy, thank you so much. I'm gonna put you on the spot and ask you. I'm gonna contact you and see if we can't do another one because there's so many facets that we can dig into,
Oh,
and
yes.
for education purposes.
Absolutely, absolutely. And Dennis, too, anybody who's listening, if you wanted to invest with you, we'll drop that price from 195 per year to 125
Oh,
and 195 per asset to 125. So somebody can invest with you
awesome.
for $250 a year. We are
Oh,
happy
wow.
to offer that to anybody who wants to join from this podcast because we want you to be able to do alternatives and we want it to be affordable.
Awesome. Thank you so much. I appreciate your time, and I
Yeah,
can't wait to talk to you again.
absolutely. Super fun.
All right. Thank you.
Yeah.
All right.
You've been listening to CRE Deep Dive with Dennis Bamford. If this episode gave you value, share it with someone who's ready to move beyond traditional investing and into real assets. And if you're an investor, operator, or custodian actively working with self-directed IRAs in commercial real estate and have real experience to share, you can apply to be featured on the show using the links below. We'll see you in the next episode.